Let's finish setting up.
Yep. Give us a few minutes. Let us just set up. We'll be starting shortly. Those of you who are already on the call, welcome, 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 welcome. Give us a few minutes and we'll be ready to go.
They could enjoy the music.
I agree.
All right. Welcome to another wonderful winning Wednesday. Three fingers out. Another wonderful winning Wednesday. And it has been an extremely busy week. We want to send a shout out to the folks at the Loudoun County Social Collective, in particular, Lisa Ann Adams. She put together a great event. It's almost like a speed networking scenario where there are a group of small business owners that are meeting and having an opportunity to explain what it is that they do. And we were able to share our banner that you guys have probably seen on Facebook, but we love that banner. I don't know why it took us so long to get a banner, but definitely we love our banner. It communicates the message that we have, right? Fund, build, scale. And I love the message that it communicates. But the more I speak about business credit, the more I am convinced that any business owner or any business that is in existence past 12 to 24 months absolutely needs to know what's inside of its corporate credit profile and to be taking all of the steps that are necessary to enhance that business profile, regardless of whatever you do after that, right? That is the foundation, because we talk about it. You cannot do marketing without access to capital. You cannot hire people without access to capital. You cannot purchase equipment without access to capital. And finally, you also need access to working capital for those times when a vendor doesn't pay you on time, or you need to bootstrap a project, either hire some people, purchase some equipment, so that you can start a job and know that you're going to get paid back in 2 weeks or a month. You need access to lines of credit. I don't know. Maybe I've been saying it too much, Eunice, but I believe now more than ever that a business owner needs to be dialed in to whatever to their corporate credit profile. They need to know what their paydex score is. They need to know what their IntelliScore is, because without it, their business is going. Don't put your business on a diet.
Mm. Well, as you are talking about that too, I want you to possibly answer this. One of the questions I received on Monday after we did the presentation was something along the lines of leverage, right? Where sometimes you have owners who say, well, you know, I do have some type of money in the business. I can afford to pay, some marketing here. I can afford to pay my employees. So I'm not as cash strapped as maybe other businesses. And I was trying to have a conversation about the importance of having that access to funds and just the leverage that it brings to you. You want to speak a little bit about that?
Well, I don't I don't understand. Walmart is a multi-billion dollar company,
Hmm.
and they are leveraging lines of credit at the same time.
Mm-hmm.
So if you aren't bigger than Walmart, or as they say, one of the things that you should do is follow the rich, right? In order to become rich, do what the rich do, right? That's
Mm-hmm.
one of the things that we had mentioned in our last cash flow breakfast club is that poor people take income and it directly goes to expenses. Wealthy, middle class people, they make the income, they purchase some liabilities, and then it goes to expenses. The wealthy, they purchase assets and use those assets to bring in income to cover their expenses. I would say that although many businesses would not grow to the level that Walmart has grown to, follow their model, and they are leveraging lines of credit, etc., in order to run their business. So why shouldn't you run that same model?
Mm-hmm. Mm-hmm. No, there is a lot of power and ability or hidden ability when you are able to leverage and use leverage to get the things that you need to get and to grow. So I think it's important really to understand how leverage works, the power it can unfold for your business, and then you'll be in a better position to have some of these conversations to realize that we are not saying get a lot of debt and just be swimming in debt, right? There has to be some level of responsibility and there has to be plans as to what am I going to be doing with all this access to cash, right? We're not just encouraging getting debt into the business. However, we want you to recognize what awaits your business and your growth when you have access to capital and when you can fully utilize leverage to grow and get the things that your business needs in order to be taken to the next level.
Absolutely. And I didn't mention it, but yesterday I want to thank Alberto with the Loudoun County Economic Development
Mm-hmm.
because he hosted a panel with bankers. And Pete with John Marshall Bank was there. Another gentleman was there. What is his name? John Bell. I need to reach out to him. And there was another lady who I don't have her contact information, but she's with a bank called MVB.
Mm-hmm.
And it seems as though their mission was targeted specifically to small businesses. They have come up with creative ideas. But one of the things that I love is when people can shoot straight with you, right? And they're saying, we're not going to loan you capital if you can't tell us how we're going to pay it back. We are not going to loan you capital if you cannot pay it back. But one of the things that I like to say is that you want to start building out your corporate credit profile so it is there as an insurance policy for when you need to use it.
Mm-hmm.
And a strong credit profile means that when you have to acquire debt for your business, you're going to be able to do it at the best terms. And by best terms, that equates to the lowest interest rate that you can get for that type of capital.
Mm-hmm.
So we know about the Virginia Small Business Finance Authority, right? We have evangelized that if you can qualify for a loan with the Virginia Small Business Finance Authority, you should go that route. Why? Because if you are a veteran, you can get a loan, a micro loan at 3%.
Yeah.
And if you are not a veteran, you can get a loan at 5%. Where can you get capital at those rates? And they're going to want to see everything. They're going to want to see your business plan. They're going to want to see your schedule of real estate owned. They're going to want to see your PFS. They're going to want to see your business plan. They're going to interrogate it, which goes back to my wisdom. I'm going to call it wisdom that nobody is going to give you money if they don't believe that you can repay it back. Otherwise, I would always be loaning money to family and friends.
That's true. That's true. And that is the thing. We are saying you are better off or you're in a better position when you can prepare for that now versus when that need arises. There's nothing as devastating as when you need access to cash today. However, you're not able to, and you are making calls, and everybody's saying, did you do step one, two, and three? And you're like, not yet, but I'm ready to go to step four. And everybody keeps taking you back to step one. And you're thinking, I'm at step four, I need the money now. And you are sending me back to step one. So you are better off doing it now and working on it. And it makes me think of how even in real estate, I love working with first time home buyers. I absolutely believe that it is so important for all of us to be in a position where we're able to at least buy our first home, no matter how small or big it is, but just the joy that comes from seeing first time home buyers be in a position where they're able to qualify for a home, buy a home, close on a home, and move into a home. But one of the things that I work with or that I tend to see is that a lot of times you see people who will come to you and say, I've been paying my rent for the past however many years, I'm good with that. I have the consistent employment, I'm good with that, all the type of things. And then they say, well, but my credit, I took a hit on my credit. And sometimes when you have to say to them, I want you to take a pause. Let's work on your credit first. Make sure your credit is good because that's going to help you even with regards to the types of mortgages that you can get or even the interest rate that you can get. So what the reason why I'm mentioning this is that when you start working on your credit as you are looking for funding, it's not the best or the most ideal scenario and situation. However, if you can work on these things, whether it's a year or 6 months prior, to make sure that by the time you now make those moves, make those steps, that you're already equipped with what's needed, what's necessary, then you stand to be in a better position than those who may come in and say, okay, I'm ready to transact Just give it to me. If it means I'm going to pay twice as much as everyone else, I'll take that, because now you are going to be losing way more than if you had done the necessary work prior.
Well, the one thing that I try to evangelize to is that we don't want people to put themselves in danger,
Yeah.
right? We do not want to set people up for failure.
Mhm.
And if they aren't taking the advice that we are sharing, because we're not thinking 12 months, we're thinking into the future and trying to set them up for success, I think that that would be someone who we probably wouldn't want to work with because they're not leveraging the advice. And the one thing that you have with age and time is wisdom,
Yeah.
right? I would not have made the decisions that I make today that I make at what that I would have made at 24,
Yes.
right? So leverage that wisdom for your betterment. But a lot of the strategies that we evangelize to, that we speak to, aren't like rocket scientists. It's not like you're pulling out, quantum mechanics, right?
Hmm.
And you're having to solve for that particular problem, right? We're not trying to launch a rocket into space. But what we are trying to do is we're trying to see people that financial freedom is something that should happen in 5 to 7 years, could be 10 years at the worst. But if you do that and you have financial freedom, the next thing that you're going to need to bring in income is through your own business. It's not rocket scientists. It's pretty simple and straightforward when you think about it. So, we don't want to harp on too many things, but I would say, for a wonderful winning Wednesday, right? And one of the reasons why we pushed this meeting back from 1 o'clock to 4 p.m. is that we get to know how the stock market ended when we go live at 4 p.m. And the biggest news of today is that the Feds are saying that inflation isn't as much as a problem as we thought, and they're holding rates unchanged. There is a little bit of analysis that there may be one or two or zero interest rate cuts towards the end of the year. But I would have to say at this point in time, tariffs haven't shown up in prices just yet. I don't know how, I am not an economist to any degree, but what I saw is the one that the Fed uses mainly is the producer price index, but the Fed uses the one called the personal consumption expenditures index. That's the Federal Reserve's preferred measure of inflation,
Hmm.
right? And inflation can be looked at month over month, or it could be, and it has to be looked at year over year, right? And month over month has only gone up 0.1%, right? And on an annual basis, we're sitting at 2.6 on the PPI side versus 2.5. I shared an article earlier this week with you, Eunice, on the fact that people are saying that the market is changing. Interest rates haven't really moved much,
Yeah.
right? But they're saying that it is now the buyer's market. However, the price of homes have gone up. I would think that if it is truly a buyer's market, then prices will be level, if not trending down just a little bit. Do you have any insight into what could be causing that to occur?
I mean, I think it really just depends market to market, right? What we have been seeing is that there are certain homes where you find that they may be limited inventory, and because of that, you're still going to find, even though you may not have as many buyers going out for those properties, the few that are still there being competitive because they realize the value. And most people now are looking at the appreciation percentage increases that have taken or have happened over the last couple of years, and people are seeing that having waited has cost them more. So people may be in looking to go in despite whether the interest rates or the amount or the level of inventory that is currently in the market. I have seen a slight decrease in condos. However, the other single family or townhomes outside of the condos, those seem to still be doing relatively well. You still have a few homes where you are getting multiple offers, not as many as the last what maybe 2 or so years. However, we are still seeing those, which ends up pushing up the prices. And I think overall, it's the market. It's so unpredictable. It is so unpredictable that one of the conversations of the last class I had with other agents, where we were all talking about how it's very difficult to prior we always knew that, okay, around you know April, May, those are the great times to sell, and this is why. And we are seeing a lot of changes where the data that we used to rely on is now pretty much saying different things. So there's a lot of changes that are happening. And because of that, I always just tell people, whether it's a buyer's or a seller's market, will really ultimately, the question is, what is your need, and is your need now or is your need in the future? If your need is now for a home, then you are going to get into the market. If your need is now to sell so that you can get into a different home, then you're going to transact right now.
Well, no, thank you for sharing that. Just because I'm not sitting in those rooms and having those conversations, but I did attend a BNI event yesterday, and a gentleman who's a realtor who I respect said, "Hey guys, it's turning into a buyer's market." But I always take whatever someone says with a grain of salt. And I always say that you have to look at it both at a macro level and a micro level. And I
Mhm.
would say that at a macro level, we probably will be seeing that there is a trend towards buyers at this point in time, right? But
Mhm.
what I did read in that article that I shared with you is that, yes, it is not necessarily a buyer's market when it comes to single family homes and townhouses, right?
Mhm. Mhm.
Those are still moving. And also because the inventory for what would be considered a starter home, that inventory is very low.
Yes.
And we have seen in our community, they're knocking down uh, places like we had a Sky Zone. We also had a Famous Days restaurant. We had a Ruby Tuesdays. They have totally wiped down, knocked down those buildings. And one of the things that is most interesting that I'm seeing is that they are creating condo style townhouses, whereby the first two floors is one condo and the second and third floor, no, the third and the fourth floor are another condo. So now you not only have people on both sides of you, but you also could have someone up underneath you or up below you.
Yeah.
And seeing that that may be the only way that we can get inventory onto the market, such that if you are a first time home buyer, you would be in a position to have affordability at the same time.
Mm. And from a pricing perspective as well, most condos tend to, from a pricing perspective, tend to be priced lower than your just your townhouse or your single family home. You know, if you look at it price per square unit. And that could also just be that with condos, of course, you also have to um, budget for the condo fees. Some of them, they have both condo fees and HOA fees. So because of that, you may find that, you know, ultimately you think it's slightly cheaper, but you end up paying pretty much more or less the same.
Well, at the end of the day, they're going to look at your DTI, see how
Yeah.
much of it is going to housing.
Hmm.
And I don't know who the lady was who I spoke to when I bought my first house, right? And we'll close out on this story. I was looking for a condo because at that point in time, I was a young man, 24 years old. I said, I don't want to cut nobody's grass. I don't want to cut my own grass. I don't want to be responsible for all of those things. So the agent who I was looking for heard what I said, but wasn't thinking out for my best future. And at that point in time, we were looking at condos, and the condo fees were 500, 600, $700. I would imagine that now today those condo fees are probably close to $1,000 per month, right?
Yeah.
I was at work and I was reading one of the penny magazines, and I saw my first house in that magazine, and I called up the real estate agent and I had a conversation with her. And she said, because I was already represented by an agent, she could not work with me, but she did give me some pointed advice in that if I had went with a townhouse that didn't have a whole lot of grass, etc.,
Hmm.
that my HOA fee would be like $100 a month, which then allowed for me to purchase more house. And by purchasing more house, right, I could have, well, by having a lower condo HOA fee, I was able to purchase more house. And that changed the window of the numbers that I was looking at just from that one little pivot.
Hmm. Hmm.
So I say that to say, if you're working with a real estate agent, make sure that that real estate agent is not only helping you out to purchase a home, but is thinking about your future at the same time. Eunice, I know that we have to go to a call, so we're going to close out with saying, hey, if it's Wednesday, it's with us. We want to wish you a wonderful winning Wednesday. And now next week, we should have a guest coming on. I've invited 2 or 3 people to join us so that they can have a conversation. We're looking at bookkeepers, we're looking for fractional CFOs, and we're looking for CPAs. Those are the people who we believe can give insight into what small business owners are seeing, and they would be able to help our community. So until next Wednesday, make it great on purpose. We'll talk soon. Have a good rest of your day.